BTC. Friends, today we're diving into a professional BTC trading strategy report. This isn't about predicting the future, it's about understanding how professional traders think and act in the current market. Over the next few minutes, I'll break down the key insights in plain, simple language. Ready? Let's go. 0.8890%. The report's core conclusion. Bitcoin is currently in a strong trend bull market, with a trend strength score of 0.88 and 90% confidence. What does that mean? Simply put, the market's overall direction is up, and the momentum behind that move is powerful. The system's recommendation is clear: use a trend-following strategy, not a counter-trend one. 1. 4. Next up is the multi-timeframe analysis. The report scans everything from the 1-hour chart all the way up to the weekly. The verdict is unanimous: every timeframe is flashing bullish. On the weekly chart, we see a bullish engulfing pattern and a double bottom, which are classic midterm reversal signals and the very foundation of this rally. On the 4-hour chart, there's 3 advancing soldiers, 3 strong green candles in a row, a textbook continuation pattern. 1 C73.94 C95.8 or C92.1. RC 70. 4. But direction alone isn't enough. The report flags a crucial warning: RSI readings of 73.9 on the 1-hour, 95.8 on the 4-hour, and 92.1 on the daily chart. What is RSI? Think of it as a thermometer for the market. Readings above 70 mean the market is overheating. And this isn't just a low-grade fever. The 4-hour and daily readings are severely overbought. It's like a sports car with a powerful engine, but the temperature gauge is maxed out. It's time to cool down. 10.14. 12.08%. Here's another red flag: the 1-hour price volume confirmation is weak, with volume at just 0.14x normal levels. What does that mean? It means this rally could be happening on shrinking volume. Prices are rising, but buyers aren't fully committed. Classic setup for a bull trap. Adding to that, the daily machine learning model predicts a potential short-term pullback of 2.08%, but remains bullish for the medium term. Bottom line: short-term overbought, medium-term bullish. MACD. Based on this analysis, the report's conclusion is clear: we're in an overbought pullback phase within a strong uptrend. In this phase, shorting is strictly off the table. Why? Because the medium-term trend is simply too strong: weekly reversal patterns, MACD bullish across all time frames, and market sentiment in greed territory. Shorting here is like driving the wrong way down a highway, extremely dangerous. There's only one correct approach: wait for a pullback, then go long with the trend. 4. So why not just buy the breakout right now? The report gives very specific reasons. First, Bollinger Bands show price pin to, and even beyond, the upper band on the daily chart. Second, the 4-hour chart shows bearish divergence: price made new highs, but momentum didn't confirm. Third, as we mentioned, the ML model predicts a short-term pullback. Taken together, current prices are a relative high point, not an attractive entry. Patience will pay off. 7180072800. 1. 70720. Now for the core trading plan. The first, preferred approach is called the pullback accumulation strategy. Simply put, wait for price to pull back into the 71,800 to 72,800 range. Why this zone? Because that's where Bollinger Band lower support, 1-hour moving average support, and a high-density liquidation zone all converge. Entering here means building a position with a safety cushion. More aggressive traders could consider the lower band around 70,720. 69,500. 73,769, 69,771. 4.4%. 75,767. Where's the stop loss? For the long position, the report sets it at 69,500. That level is interesting. It sits just below a recent low around 69,771, and also outside the high-density liquidation zone. The stop distance is about 4.4%, an acceptable level of risk. Take profit targets come in three tiers, first at 74,441, near the liquidation cluster, second at 75,767, 76000 taker 55%. 75 90076 20073 50078 00080 000 1.5%. Beyond the pullback strategy, the report offers an alternative, the breakout accumulation strategy. It triggers when price breaks above the key level of 76,000 on strong volume, with taker by ratio above 55% to confirm genuine buying pressure. The entry zone is 75,900 to 76,200, with a stop at 73,500, and take profits at 78,000 and 80,000. This is for traders who 1.5%, 2%, 4%, 3%, 6%, 3%. Whichever approach you choose, position sizing is critical. The report recommends starting with 1.5% to 2% of your capital, with total position capped at 4%. And stops aren't set and forget, they should trail higher as profits grow. For example, once you're up 3%, move your stop to break even to guarantee no loss. At 6% profit, move it to entry plus 3% to lock in gains. This is called a trailing stop, it protects your profits and ensures winning trades never turn into losing ones. Reci. 4. Before we go further, we need to talk about risk, clearly and honestly. The report lists several major concerns. First, overbought pullback risk, RSI readings across timeframes are overheated, and gravity eventually wins. Second, bull trap risk, rallies on shrinking volume often fake out traders. Third, bearish divergence on the 4-hour chart. One thing people often overlook, there's a high concentration of stop-loss orders near current price levels, which means volatility could spike. These warnings aren't meant to scare you, they're reminders to always ask, what if I'm wrong? 500. 4%. The report also lays down a few non-negotiables. Never short, fading a strong trend is the fastest way to lose money. Don't chase prices above 74,500, good opportunities are found by waiting, not chasing. Never over-leverage, total position size must stay under 4%, full stop. And most important of all, a stop is a stop. If price breaks your stop, you exit, no exceptions, no negotiation. Many people blow up accounts because they refuse to accept a small loss, and it spirals into a catastrophe. These rules aren't complicated, but very few traders actually. 72-71173-00069 50074 44175 76777 500. Let's wrap it all up. The market regime is a strong bullish trend, the direction is clear. The strategy is to follow the trend and buy only on pullbacks, never chase, never short. The preferred entry zone is 72,711 to 73,000, stop at 69,500, with targets at 74,441, 75,767, and 77,500. The entire execution can be summarized in 4 phrases: wait for signals, build